China's mounting an attack on their own economy.
It seems like they want to destroy American stocks.
Are they doing it? Why are we seeing such an aggressive tone?
This is the Cold War and the financial aspect of it.
I think it's a grave miscalculation on Beijing's part.
What's the end game of the Chinese government?
They've thrown their largest companies and indexes into a downward spiral, creating losses not seen since 2008. And this begs the question, is this the buying opportunity of a lifetime? Is it like buying Amazon for half off, or is this just the beginning of the end? And that's what I'm aiming to figure out.
Alibaba down 10% over the past month. You have Baidu down 15%, obviously major player in the online tech market in China.
You can't own these stocks.
Yeah, good luck for anyone trying to pick the bottom in these because you're essentially going up against the Chinese government.
China's demonstrating a show of force to their largest companies and entrepreneurs with these recent waves of regulation and the kidnapping of industry leaders.
The Communist Party has been concerned about the growing economic and political power of internet platforms that have large monopolies. China's leaders are most preoccupied by maintaining stability and their own leadership. They feel challenged. I think that China looked at Jack Ma and saw John D. Rockefeller and thought that, gee, we need to control this guy and people that can challenge us.
Recent regulations in the education sector and the decimation of the tech giant Didi by the Chinese government has added fuel to the fire, worrying investors even more.
Chinese tech and education stocks plunging today on the latest round of regulatory pressure.
Ticker EDU, New Oriental Education. That stock lost 54% on Friday.
First trade on Didi when they went public at the end of June, 1665, closed on the first day of trading at 1414. Today, it might open around $7. It's been completely destroyed, and there's no bottom in sight.
And Didi's no small fry. They're the Uber of China, holding a 99% market share in the ride economy with its 15 million active drivers. The question is, if they'll attack Didi and their richest entrepreneur, who's safe? And the problem is there's no such thing as a perfectly safe investment, except maybe one, Webull. With the stock brokerage Webull, all you have to do is deposit $100 into your account and they will send you 2 completely free stocks, and you don't even have to spend your $100. Plus you'll be helping out this channel because they will send me a free stock as a thank you. There's a lot of speculation as to why China would do this and essentially hurt their own economy by driving out US investment, eliminating benefits of the free market, and kneecapping their largest economic drivers. I believe to better understand why this is happening and what the future holds, we need to take a look at the economic history of China. In 1949, Mao Zedong declared China to be Communist China. Mao's reign was defined by extreme poverty and economic inefficiencies. Deng Xiaoping became the leader of China in 1978 and ruled until 1992. And in this time, Chinese leaders looked at the developed world around them and realized it would be in their best interest to allow for some free enterprise. The Chinese Communist Party loosened its control and incentivized production within their country. This system was termed market socialism. In the initial readjustment period, the CCP began allowing businesses to retain their business's profits after taxes. This would allow them to reinvest earnings back into the business. Compare this to the system before, where all earnings needed to be turned over to the state. Businesses could now conduct an international trade and begin to compete on the world stage. Industry and production saw a boom and grew at 11% annually for more than 30 years through 1985. Through the 1990s, businesses in China were still growing at a very rapid pace and poverty was decreasing. However, more than half of all the state-owned enterprises were still reporting losses. The issue is there's no urgency for profit in a government-owned business. China's economy continued to grow at an average rate of 10% per year from 1990 to 2004. This is the fastest an economy has become established on the world stage in history. The World Bank estimated that the total number of people in extreme poverty in China decreased from 835 million to just 173 million between 1981 and 2008 because of this revolution. By 2007, China became the world's 3rd largest economy. In the early 2010s, China's tech and e-com businesses were on track to become some of the biggest in the world. And by 2020, 3 of the top 15 largest tech companies in the world were established in China. However, in recent years, this rapid growth and success has led to concern by the Chinese government that things may be getting out of control. The wealth gap is dividing, businesses are getting too much power, and top entrepreneurs are gaining too much influence. And this brings us to today, with us stuck in what's being called a financial Cold War, with the biggest question being, how far will China go? The US and China have been in a stalemate for quite some time. A stalemate that China feels is the US's fault for always seeing China as, quote, an imaginary enemy. China has recently issued demands on the US that include lifting visa restrictions on members of the Communist Party of China. This is a restriction that was imposed in late 2020 to limit travel durations to just 1 month, and demanding that the US withdraw Meng Wanzhou's extradition, the CFO of Huawei who has been charged with fraud and is being held in Canada. Now back to the issue of stocks. Stocks in China are selling at large discounts relative to US companies. Where Amazon is selling at a price to earnings ratio of 69, Alibaba is selling at 23. This means you could theoretically make 3 times more in earnings on an investment in Alibaba at current prices. But this discount is for good reason beyond the current political unrest. So let's talk about the risks in these specific investments. When you buy stock in a Chinese company, you're buying an ADR. ADRs are a certificate issued by a US bank that represent a number of shares in a foreign company's stock. It's still 1-to-1 though. You can think of it like buying a key to a safe sitting in China, and you can exchange that at any point. However, many of these Chinese companies you're buying an ADR of are actually a VIE, a variable interest entity, a second layer of confusion, if you will. You're buying shares of a company that's incorporated in the Cayman Islands that represent ownership without voting rights in a Chinese company. And there's massive concern with these structures in the current political climate.
You own a VIE structure, period, which a lot of lawyers in China and elsewhere think is illegal in China, and Chinese governments always come out against them.
Delisting of a Chinese stock in the US would mean that the stock is no longer tradable on US stock exchanges. Now, this doesn't mean that the stock is rendered untradeable altogether. It would still be available in OTC markets. However, that delisted stock would be open to far less liquidity. An example of a delisted Chinese stock is Luckin Coffee, who was delisted after being caught for fabricating $340 million in sales. And this stock's delisting plummeted the stock's price to 95 cents a share. However, once the stock was on the OTC market, the stock increased again 900% to $8.64 per share. We simply don't know what will happen next. An argument can be made that China sent their message, that there isn't much to worry about beyond now. Further action will only hurt their own economy. And investors of this mindset are buying the dip and attempting to pick up some excellent companies at rock bottom prices. However, of course, many arguments can be made that this is only the tip of the iceberg, and the threat of delisting and more regulation are closer to reality than they are fiction. What do you think will happen next? Hey folks, thanks for sticking to the end. I'm trying out this new style of video, more of a news documentary format. This type of video actually takes me 30 to 40 hours to complete, so if you enjoy it, please let me know by hitting the like button, subscribing, and consider joining my Patreon for even more content. So I'd like to thank you so much for watching, and I hope you have a profitable day.